Well, thank you for joining me. I'm Tom Perrone, and you're joining the broadcast called All in the Numbers. And this is a broadcast which we take financial strategies and ideas, put them together, and share them with you. And today I'd like to talk about a couple of things that are very, very important. But before we get into the program, I'd like you to take a look at how you can contact me and how you can send me any email or question that you might have. You can send it to necgginc at icloud.com or call me at 203 530 6615. Well, today I want to talk about case study number 3. Thanks for joining the broadcast. Again, I'm Tom Perrone. But this is a case that we put together, and it was really all about developing and retaining key people in the company. The owner recognized that he spends a lot of money on paying good salaries and benefits, and he's training his people, and obviously to keep these people together as a key group or the key person. In his particular case, he had 2 key people about 45 years old, and he wanted to keep them there because they would be the future market for his company. Now, first of all, if you haven't received the case study, I'll explain to you in a moment how to get that. I'd be more than happy to send it to you. But we're going to talk about the retaining of key people. And we're going to use a special program called the CEEP, Corporate Executive Equity Plan, which is a combination of different executive benefit programs. Now, the objective is to keep the key group as long-term employees. That's certainly to the benefit of the company. For a lot of reasons, it creates a business culture and, of course, the value of the company. It creates a future market for owners of the company. It creates the possibility of an inside sale or possibly passive ownership in the company. And passive ownership being I am the owner, I have a group running this company, and I come and go as I want. I give up a lot of my tasks. I only keep a couple of key things. So I'm not burdened by the company and running it. And I pay my key people very good money to run the company. Increased business value and market value. A lot's going on here. Anybody who plans on buying your business is going to look at your key group. That gives it business value. And of course, the market value itself when you sell it because you have systems in place and the right people. Having a key group of people, key person, whatever it might be, is also great because you're starting to create a next level management, which is needed for the growth of the company down the road. And you also want to have a plan in play where you could protect the key people from the competitors. The competitors know who are the key people in your company, and they'd love to have them in their own company. So, one of the things I looked at in the fact pattern was we had age 45, 2 people married, good timing in their life. The employer decided that they would put $10,000 in for each employee's account. They would vest the schedule. Either they would do it 25% a year or over 5 years do a 20% schedule. So what we wanted to do there was to keep the employee longer and have him vest. And every year he vests, obviously that's harder to walk away from as the years went by. The benefit would have been $30,000 a year, 65 to 90. Now that could change. That could be a little bit more per year over a shorter period of time, but we can change that around. The point is that the employees were going to get about $750,000 of living benefits. There's a company cost recovery in the program, meaning that at any time the employees died, the company is going to be fully paid back whatever they put into the program. And also, in pre-retirement death benefit, we had the benefit being $500,000 per employee payable to their family. And when the owner retired, the employees would have first refusal on the business. So they get to say yes or no if they want the business. That's a good deal. And obviously, if they have a benefit in play, that benefit could help purchase the business. So how does it work? Well, the way to look at it is if you have an employer who sets up a program, they're going to deposit the premium into the account. And there could be a sharing. In this particular case, what we did is we had the employee was imputed what we call loan amount, and it worked out to be about $120 net a year for the most part to have a high death benefit. Upon their death, the employer will get paid back what they put in contribution, and the employee would have a death benefit payable from the insurance company to their family, pre-retirement. Now, post-retirement, what's going to happen is the agreement was to pay $30,000 a year, which costs the employer about $23,000 after taxes, since that's a deductible payout. Well, the employer will borrow or loan out tax-free the money in the equivalent of $23,000 to pay back the payout. So it cost the employer $30,000 gross. They took a deduction. It netted them a $23,000 cost, and they recovered tax-free $23,000 in the insurance plan to pay back. So we had that zero outlay, really. It cost them nothing. Also, if the employee dies, we have a death benefit that will finish the payout and, of course, recover the costs for the employer. So the payouts are tax deductible. The payments are grossed up to increase the payment to the employee, and we net it out by taking the money out of the policy. After death, the employer recovers the values. Family beneficiaries get a payout. And the employer can really change this around and make that death benefit post-retirement even richer if he wanted to, depending on death. So there's a lot of flexibility there. So I did this special report, and if you did not get it, you can request it by emailing me at necgginc@icloud.com or call me at 203-530-6615. Please look for our other case studies and the video for this. And if you want someone to hear this video, let me know and I'll send the link. Thanks very, very much. Again, thanks for tuning in. I hope you enjoyed the broadcast and you learned some information that might be of value to you. Have a great week.